Howdy there, folks, and welcome into this video here today. We're going to go over 72 stocks. Yes, 72 stocks that are down a minimum of 65%. And this was done yesterday. Thanks, Tom Nash, for posting this on your Twitter. But essentially, this was done yesterday. Now, the market's down big again today. So almost all these stocks are down another 1% to like 5% here today. They're all getting hit much harder, okay? And so what we're going to do is not just, go over this list, but I'm going to tell you my opinion on these different stocks, if I have an opinion, if I think they're good stocks, bad stocks, those sorts of things. And I want to talk about two things right off the top here, okay? The first is in regards to percentages, all right? And I know for people that are good at math, you probably don't need this lesson, but I think it needs to be said because a lot of people, they think like let's say, for instance, like Robinhood. They see it's down 86%. So naturally, unfortunately, some people think, oh, Robinhood only needs to go back up 86% to get back to where it used to be. No, that's not the way math works, essentially, right? Robinhood peaked out at, I don't know, $85 a share or whatever, right? Today, it's roughly around 10. So if Robinhood goes from 10 to 20, that's 100% gain, right? If Robinhood goes from 10 to 30, that's a 200% gain now we're talking, right? So the way math works, it doesn't quite work like, the way it looks on face value where you're like, oh, this stock's down 69%, it needs to go up 69%. So keep in mind, right, that a lot of these stocks could go up several hundred percent, and they still wouldn't even be back to their 52-week highs. Now, that's kind of irrelevant to you in the end, right? Because all you care about is making money in the stocks, right? That's all that matters. So you don't necessarily care that it gets back to its all-time high. That's great if it does. And some of these stocks will get back to their all-time highs and will surpass their all-time highs. Some of these stocks won't. That's just bottom line. Like some of these stocks will never get back to where they used to be, but some of these on this list will get back to there and get even to higher numbers where they essentially used to be, right? And second point I want to make before we get into this, and I think this is just really important, I understand it's really, really easy to laugh at folks that have invested in these stocks, whether they invested at the peak or whether they've invested at some point when these stocks went down. Let's say something like Robinhood, right? Yeah, it was 85, but let's say somebody bought in when it was 30 or 40 or 20 for that matter, right? I think it's very easy to laugh at folks and say, what are you doing messing around in those sorts of stocks? You should be in, this sort of stock. Why aren't you just putting your money in Apple, or why aren't you just putting your money in index funds or whatever, right? And I would just be very, very careful to laugh at those people, right? Because if we just take it back a little over a year ago, we were in a situation essentially, right, where a lot of the growth investors were guess what they were doing? They were laughing at value investors. They were laughing at dividend investors, and they're like, Grandpa, what are you doing with your money over there? You need to have your money over here in the growth stocks. Look at how much money I just made. You're making hardly anything. I'm making 200%, right? And so you had that moment in time, and just understand now, if you're laughing at these same folks, the game can get flipped on you all of a sudden, right? And when this market bottoms, whenever that is, and that's a big debate, whether it bottoms in the next few weeks, the next few months, in the next year, like that's a whole big debate, right? And that's not what we're going to get into in this video. But what I can promise you is whenever this market bottoms and it starts flipping green, a lot of these stocks are going to go absolutely beast mode. And a lot of these stocks on this list here, okay, will go up 50%, 100%, 200% in a matter of months. I'm not talking about years. I'm talking in a matter of months. And so do keep that in mind and just be very, very careful when you're out there, laughing at folks saying, you're losing all your money. And also keep in mind, guess what has been falling a lot lately all of a sudden, right? The last sector to fall has been a lot of the value stocks, the more safety stocks, the more traditional big companies that are well established, right? That have been public companies for a decade, 2 decades, 3 decades. A lot of those stocks are even falling now, okay? And so do keep this in mind, and I just wanted to say that because I think it's very, very important to understand. You can always poke fun at people that are going down on their positions, but it's not right, and just understanding the game will be flipped, okay? Alrighty, guys. So, by the way, if you're not subscribed to the channel, make sure you hit that subscribe button. It's absolutely free to do so. I always talk about stocks on the channel, the markets, everything that's going on out there. So let's start out here at the bottom, and then we'll work our way up essentially. And once again, all these stocks are down 1 to 5% more today than where they're down on this list. Alrighty, guys, first one up here, Twilio, 65% down from its 52-week high on that one. Twilio, growth company, I haven't gotten to research that one quite deep enough to really have a great understanding of that one, so I don't want to put an opinion out there on that one. Docusign. So Docusign, I think there's a much better player, in my personal opinion, to play than Docusign, and I think its name is Dropbox. So Dropbox is valued extremely cheaply right now. I mean, you're talking about a forward P of about 15. Dropbox, you get the cloud product, that is Dropbox, right? Which is a very, very sticky business model. I've used Dropbox for like, I don't know, 6-7 years now. And they have their recurring revenue stream of cloud, right? Which is for a lot of just individuals, small businesses, and even mid-sized businesses. Then you also get their platform, which is a Docusign competitor as well with that stock, and you're not buying it at nearly as high of a valuation. Now, the one thing I will say about Docusign is they're the number one player in that market, which is really nice. I just think that if you're looking for a safer and actually a play that has more upside, I think Dropbox is that play, in my personal opinion. So I don't know. We'll see what happens over time. When it comes to that, I just think Dropbox is a better play, okay? Big C, I don't really have a strong opinion on that one. 65% down there. NRDS, I don't even know what that stock is, down 65%. Roblox, 65%. Roblox, oh man, that one seems like a little bit of a trendy fad type stock, to be honest, okay? And I used to be in a company that was in that trendy fad type space many, many years ago, and they were a profit machine. They made money hand over fist, and it was called King Digital. And they owned the Candy Crush game, the Candy Crush Soda Saga, and things like that. They used to pay me out some insane dividends. Like the biggest dividends I ever received in my life were from that company, essentially. Well, maybe outside of Walgreens recently. But this King Digital company, right? They were a profit machine. They ended up getting bought out by Activision Blizzard many years later. So this Roblox, that one's tough for me. It seems you got to understand, like when it comes to these sorts of companies, you could very easily all of a sudden be valued at very, very cheap P ratios and things like that. And King Digital used to have trouble even commanding a 10 P ratio. Like when I was buying that stock, a lot of times the P ratio was like 8, 9, like ridiculously low, right? Because a lot of folks looked at it and they're like, yeah, the people are using these games right now, but easily in a year, 2 years, 3 years from now, this might not be as popular, right? And it's very hard to emulate that success again. And so there's a lot of built up risks that comes with being in those sorts of stocks. So that's kind of that, right? GME, GameStop, that's one of those. I just don't see it there with this business model. I just, don't see it. I know there was the whole short, squeeze situation. I believe there's a lot of stocks out there that are far better if you're trying to play a short squeeze play than GameStop. I can tell you that by a mile. So when it comes to GME, just don't see it there. SE, don't follow that one on a high enough level to have an opinion there. CRISPR, 66% down. Don't really have an opinion there. Could be interesting though. Square, 66% down. So Square, first off, there's a better play in my opinion that's safer, and that's PayPal, which is also down 66% as well. But when it comes to Square, the great thing is they got the number one most popular app in the entire finance category, right? That's pretty darn powerful. And they have their traditional business model that works with a ton of retailers and small mom and pop shops and things like that. And I even used to use Square back in the day when I had my real estate marketing company, right? So I like Square. I just like this guy better. PayPal, like if I'm putting my money in one of these stocks, both are down 66%. PayPal trades at a much, much lower forward P, current PE. They have a better balance sheet. They have a better, pretty much everything, in my opinion. They have usually the number 2, number 3 most popular apps in the entire finance category in Venmo and PayPal. And so I just think PayPal is better positioned than Square. I like them both. I just like PayPal more, okay? Bath and Body Works down 66% there. That one, solid retailer. That's all I'll say about that. Solid retailer. You're not going to get the most growth in the world out of them, but they're a solid play. BlackBerry, 66% down on that one there. BlackBerry, they've said a lot over the years, and I haven't seen enough action. They know how to tell a good story, and John Chen over there knows how to tell a good story. But when you look at the numbers, it's like all these years they've had, and it's just they haven't really progressed the way they should have. I remember listening to John Chen talk, probably 7 years ago, and give this big story, and it's just it hasn't come together like that. Penn is a gaming play, 67% down there. Don't have a strong opinion there. Don't have a strong opinion on any of these guys. Upstart. High growth play there. Not really a strong opinion there. BYND, I think BYND's in a really good spot in 22. They report earnings this week. That's one of those stocks I think is in a really, really good spot. And because they're going to have a reacceleration of growth, it looks like, in 22. And that's extremely powerful. I mean, extremely powerful. So Don't be surprised if Beyond Meat goes beast mode in kind of the middle part of this year and into the back half of this year. I think they're setting themselves up in a really, really good position over the next, not just over the next 12 months, but over the next, several years. But as far as like the stock price goes, don't be surprised if that one goes beast mode in the middle of the year to the back half of the year. Open Door, 69% there. Not a strong opinion there. PRLB, not a strong opinion. No opinion, no opinion. Tree, 69%, no opinion. Rocket, 70% down. I do have an opinion on that one. And I've said this for the past year. They're just in a really, really tough spot in the short term, right? And when I say the short term, I mean for the next 12 to 24 months. And the reason being is like everybody you could possibly think about that wanted to refinance has already refinanced, right? Now, if you're talking about interest rates going up, that's going to make the housing market even slow more, which this is a play if you're banking on mortgages and you're banking on refinances, right? And so when it comes to Rocket, they're just in an extremely tough spot. And remember, with everybody already refinanced at such low rates and having these mortgages at, in terms of what they have to pay for their mortgage compared to what their house is worth at such low numbers, it's going to be a tough housing market in terms of getting people to move out of those homes. Let's say you're in a home. I mean, I know people that are in homes right now, right? That those homes are now valued at like $600,000, and they're paying a mortgage of like $700 because they bought the home, 5 years ago or so at significantly lower prices than that, and they refinance at insanely low interest rates and those sorts of things, and so they'll be paying like $700, $800 on a house that now is all of a sudden valued at like $600,000. Now, if they were to go get a new house that's $600,000, guess what? And they were to do the 20% down and whatnot. Now, all of a sudden, their mortgage could be somewhere around $3,000-ish. That's like night and day. You can't even compare those, right? And that puts Rocket in a really, really tough spot, okay? No opinion, no opinion, no opinion, no opinion. Zoom stock, I gotta say with Zoom stock, it's actually getting pretty darn intriguing. It's not my favorite play because I feel like their technology can be copied by big players and integrated well. But I mean, shoot, is Zoom probably a moneymaker now? It is honestly probably a moneymaker over the next couple of years. And that's a big change for me because I've never, liked that stock. But I got to say, I mean, if you told me I could either have my money on cash or have my money in Zoom, I would put my money in Zoom versus cash, believe it or not. Sam, 71% down there. That's a huge play in the basically the beer space, let's call it that. Hard seltzers, Sam Adams, all those sorts of products. Likely a moneymaker. Sam's likely a moneymaker over the next several years. They just had some bad stuff happen to them short term, and especially with the hard seltzer category growth slowing in a major way. Now we won't get back to growth. Real. So Real, I think is a perfect acquisition candidate. I would not be surprised if that one gets bought out in the next year or two. Real. This is a play like, if you wanted to buy an expensive purse, let's say secondhand rather than, full price. That's a place and they can, get it authenticated and make sure it's real and all those sorts of things. So I like Real. It's not my favorite stock in the world, but I do think it's a moneymaker. I do think it's going to end up being an acquisition target in the next 1 to 2 years, in my personal opinion. No opinion there. Pins, I don't really like pins. I don't like ones that are one-trick ponies in that space. That's a tough space, okay? No opinion. AMC, the good news is movie theaters should get busier over the next couple of years as more blockbuster movies come out. Bad news is, unfortunately, that stock still has a very, very rich valuation. I know it's come down 75%, but because it got pushed up to such insane levels, right? Because of that whole movement that happened there, essentially, they're in a really, really tough spot as far as getting that stock price to move over the next few years. PLBY, interesting stuff has been happening there recently with NFTs, but I don't know. It seems a little sketch, okay? DraftKings, don't really have an opinion on that. People are always looking for my opinion there. I don't really have one. Oatley, a lot of growth in Oatley. I'll just give you one quick example with Oatley. I switched from, traditional cow milk to Oatley. This was, just starting a few months ago. And so that took me from a situation where I spent no money with Oatley to now every single week we spend anywhere from $30 to $40 with Oatley every single week. Week in and week out, $30 to $40 goes to Oatley. And that's something I see playing out in mass over the next several years as people basically change from cow's milk to oat milk. And, if I could do it, I could tell you, and I actually like Oatley better than cow's milk now, which is crazy to even think about because I was somebody that drank 2-3 gallons a week of cow's milk. But I much prefer Oatley now, and that's just powerful, and I see that playing out in mass over the coming years. Wix down 76%. Don't have a strong opinion there. Honest, obviously, I feel like this is one of the best deals risk reward wise in the entire stock market. HNST. They're in such a great position over the next several years, where their main competitors are all have announced they're taking pricing action, which means they're raising prices. Honest can raise prices as well, help themselves get to better profitability metrics over the next and better margins over the next couple of years, or they can take market share. I think Honest is in a great sweet spot right now. And I think that one has one of the best risk rewards you'll ever find in the stock market that I've ever come across. No opinion there. Teladoc, 78% down. Teladoc, T-Doc there. By the way, Honest, they just went public at the worst time. Teladoc, I think, is a moneymaker long term. I think this one's gotten way too hammered now. Do I think it should have gone up to over $300+ when it did? Probably not. But now I'll say when this stock's trading at, oh my gosh, I mean, recently it's been trading, I think, at $60 or so. Now this is going to be a moneymaker. This is a platform that's just going to get bigger over the next decade, in my opinion. And I think they're going to build into a really, really profitable business model. I know, they've been always losing money, but I think they're actually going to build really, really profitable over the next few years. Roku, never been the biggest fan there. I know Kathy Wood is. It's just not my cup of tea. No opinion there. Redfin, 78%, no opinion there. Fastly is a company we actually use or have used for the Hungry Bowl, which, by the way, if you haven't signed up for our email newsletter yet for Hungry Bowl, it's absolutely free to do so. Check out pinned comment down there. So I haven't got to look into the company deep enough, but I can tell you there's a need for their product out there. But I don't want to share too much, okay? Fiverr, 78% down. I think Upwork's a better play in this space than Fiverr, but both are probably moneymakers long term. That's an industry, freelance economy that's just going to continue to grow. Hims stock's actually really, really interesting, 78% down. Hims. That's one of those stocks, I know we did a face-off Friday about a month or two ago, and I was trying to figure out, is this like a company that just has kind of a finesse on the system, or do they have actually a long-term great business model? And some people are trying to compare it to Teladoc a bit, and that's a little tough for me as far as that goes. So I just need to do a little more digging on Hims, but Hims actually seems pretty interesting, okay? No opinion. Peloton, no, okay. Affirm, Affirm, got to say, and I know Kevin this used to be one of his stocks back in the day. Well, it wasn't that long ago, okay? But when it comes to Affirm, intriguing. Not my favorite play. I think I'd rather just play PayPal because they're also in the buy now, pay later place. See, that's the thing with Square, with Affirm, with a lot of these stocks. It's like if you can just get the best of all these worlds all in one stock with far more safety, I think PayPal is that play. But when it comes to Affirm, I'm looking at this one, and I think it's actually probably a moneymaker, believe it or not, which, once again, this is not my favorite stock. I think PayPal is a much better play, but it's hard for me not to see that stock going up over the next 3 years. No opinion. Bark seems interesting. I got to do more digging there. Fubo, I actually like Fubo. Huge money loser, but huge revenue growth opportunity there. And they've carved out a nice market for themselves. Now, I do believe with Fubo, they'll probably be an acquisition target. I wouldn't be surprised if somebody like a Google makes a move on them long term. Maybe even Disney makes a move on them long term since they're so focused on sports. And when it comes to Disney, they obviously own ESPN and so many sports broadcasting and whatnot. So I wouldn't be surprised if Disney ends up making a move for Fubo over time. Don't be surprised if you see that. Matterport, MTTR, I have never done enough digging on that one. It seems like a company that has a niche product, but they try to pitch it as something much bigger than what they are. Puts them in kind of a tough spot, so I'm going to do more digging there. Lemonade, I like Lemonade. The problem with Lemonade is it's similar to like a Teladoc in the respect that we don't know if and when they're ever going to make money with that business model, and that puts them in a really, really tight spot, right? But at the end of the day, I see this business model getting much, much bigger over the next several years, and eventually they'll be respected, right, in this market. Stitch Fix, not my favorite company in the world, but I gotta say I like Stitch Fix, and it's another one that it's hard for me not to see them making money, especially when you take into account the world truly opening back up now. And a lot of companies are going to be going back to the office now. Maybe not in the same way they once were, but a lot of companies are going back to the office, okay? Something like Stitch Fix will thrive in that sort of environment where, people have to go back to the office, and they have a huge demographic of females, essentially, that use their service, and a lot of them are business professionals. So I actually like Stitch Fix. They've expanded outside the United States recently. They expanded into children's clothes, and I've used the service many times myself and for my family. I actually like it. I like it. I think it's a moneymaker over the next few years. Space, 85%. That one, that's like betting on going to the moon, essentially. That's a tough one. That's one of those. It's one of probably the highest risk reward plays in the stock market, in my opinion. I've never been necessarily a fan of the company, so I'll just leave it there. Okay, Purple, moneymaker over the next few years, in my opinion. Purple, they're a mattress company, bedding company. They've been in a kind of a tough spot recently, but I think Purple's a moneymaker over the next several years. That stock's just been devastated, 86% down there. U.S.-based play. They make almost all their products, the majority of their main products, all in the United States of America. And I think they're building out a really nice brand for themselves that's going to last quite a while. Let's just put it that way. So Purple, I like that one. I think it's a big opportunity. Hood's never been my favorite stock. I think everybody knows that. What I will say about Hood, okay, this is very important, all right? The good thing for Hood is we had that massive retail influx of folks that got in the market, right? From basically March of 2020 through March of 2021, we had massive amounts of people flood to the stock market, all right? Now, a lot of those people have already left the stock market. They left it, throughout the back half of 2021, right? And so, but at the end of the day, all those people getting at least used to the stock market, getting brokerage accounts set up, getting used to kind of buying stocks, and a lot of those people made money and then they just left the stock market, right? The good news is, those people are not going to forget about the stock market, and they will be back. They won't be back all at once, but they will be back over time, right? And they're going to understand, hey, this is at least an opportunity out there, right? And when you see a lot of stocks that are down, what do we know? Buy. And so I think long-term, Hood can actually benefit from the fact that so many people came through the stock market, and a lot of those people had success. And I think there's a chance that a lot of people will come back and they'll give Hood a chance because that's what they got used to using, essentially. So yeah, not my favorite stock, but actually it's one that has gotten so low now that I wouldn't be surprised actually at all if that one doesn't double up or triple up over the next 3 years, essentially. No opinion. Ride, I don't have an opinion there. Wish stock, it's just a tough one, man. I know it's $2 a share now, but that's still a tough one. And Clove, I don't have an opinion there. I know a lot of people really like that stock. It's down 93%. I just don't have an opinion on that one. So that's my opinion on all those stocks, guys. Let me know if you own any of those stocks in that list in that comment section. I would love to hear from you guys as always. And if you have any price targets for any of these stocks, I would love to hear from you guys. If you have any bullish thesis, like strong bullish theses, leave them in the comments. I'm definitely going to read through the comments this video and see if you guys got any strong opinions on those, as always, because that was a lot of stocks we went through. Hope you guys enjoyed this. As always, don't forget to smash and make sure to subscribe to the channel. Get some free stocks from Moo while you still can. Right now, they're doing a $100 deposit. You get a free TTCF share and up to 5 free shares. Much love and have a great day.